I'm back again. Yesterday we been Thursday and the 19th day of May, 2022. We had a trade on gold to the US dollar, and it was actually a wonderful trade. And so right on my screen now, I try to label a lot of things, but honestly, when I am trading currently now, I don't label my charts. I don't like it looking messy because I'm already used to most of all these. I'm already used to them. So by merely fixing my eye on a chart, I know what levels are important and what levels that are not important. So I know currently there are some people who don't like the concept of trend line. They just hate it. They will shout retail approach, retail trading. I'll be like, yeah, okay. When it comes to trading, do what works for you. I always love to blend the smart money concept with some basic retail concept that I am aware of just for the sake of confluence. I love confluence, at least having a minimum of three reasons to take a trade. Every trade in itself is still a risk, but when you have at least a minimum of three reasons to take a trade, it convinces you about something. So you are not just throwing your money into the air that whatsoever comes, but you are betting on a move, but to some extent a degree of certainty, whether it goes for you or against you. But at least we always have our eyes on the risk to reward of the trade. Looking at this trade, it has a risk to reward of 1:16, so that was quite massive. We were risking 19 pips to gain though actually I had mine at 22 pips to to gain 329 pips. So you can see the difference. Now I had several reasons why I took the trade. Basically, I we had this. Okay, let me. This is okay. The 1 hour. We had this other block seated here. Um, please don't mind this very other block I drew here now because I've extended it to the future already. So let me take away this now. Let me take away this so something will be clearer. Take a look at this. If you zoom in or go to something like the 15 minutes, you will see it clearly. So we had this other block here. And we had this other block here. This actually I was pointing at the liquidity. We had double high here, equal high, so to say. So we had this other block here. Take a look at this other block that I just drew here. This other block here. So I had to extend it to the future, and this was happening on Wednesday. And when I extended it to the future, I make sure that I placed my pending order, factoring in the spread in my pending order. So if you go to a lower time frame, you will see room for better entry. But this was actually I used the 1 hour, so I extended it using the 1 hour time frame. And looking at this very digit here, you will notice something. The market broke structure. It changed structure at this point. So there was a break in market structure at this point. A full body candle close outside is high, and I was waiting for the market to tap back into the very other block that was basically responsible for this move. Now, when I did that, I went up into the 1 hour time frame, and I had to set out for another other block up there that has not been mitigated yet. I mean, when I mean mitigation, I mean an other block that price has not tapped into it yet. So up here is another block on the 1 hour time frame, and on this other block we have another equal high. If you watch an equal high, meaning that there will be some degree of order resting on it. So what I did was I have my eyes on this high, and bringing in the concept of trend line. I love trend line, no matter what you always say about it. Yeah, I love smart money, but I know how to blend it with trend line in terms of profit taking and confluences. So I remember the old concept that so many people started trading with. Don't throw away most of all those concepts to the window. It will help you if you actually know how to sew your feet, the fabrics together to make a nice outfit in your trading approach. So I had a remember that concept of third touch I spoke about then 1, 2, 3, and so I was looking at this trend line, first touch, second touch. So I knew that something around this third touch is going to be graceful. And once market, remember what I said then? I said when the market makes the first touch and second touch, you connect it with a straight line, expecting something to happen around the third touch. Now, if you look down here, you will see something again. First touch, second touch. So I was expecting something to happen around the third touch. And luckily for me, I had a confluence of trend line and order block. And up here, I equally have a confluence of trend line and order block. See this order block extended to the future, and this is the trend line. So therefore, I knew that something massive is about to pull out. So I factored in my spread, my pending order. This is an excellent sniper entry, and the market picked it price here. This is a breaker block here, and I extended it to the future likewise. And when we got into it, we broke above it, and the moment we broke above it, I knew that this is a confirmed flip zone. These were a resistance turn support. So at this point, resistance turn support. On a normal day, since this is gold, being that gold is too volatile, I refuse to add extra orders on it. But if it were order forex pairs, I would have added extra orders on it. So when I did this, I make sure that I moved my stop loss to break even to some points here. Make sure that it's now a risk-free trade, but I didn't add any additional trade on it because this is not or like this is not a currency pair, though it's not just a basic currency pair, it involves gold. So the volatility on gold is something else. So what I did was I moved my stop loss to some extent here, knowing that the market has made something here. So at the moment the market broke closed above this breaker block here, this is a demand zone, this is a supply zone, and since it's a supply zone, we're expecting a sell, but the market flipped above it, making it a flip zone where supply became demand. Resistance turned into support, so it flipped to the other side. And what I did was just to be trailing it, and but my target was still here, and just my take profit was just few pips above this equal high, because I knew that the market must take out some orders into here just to generate liquidity for any trade that the big players may have in mind. And that's just it, as simple as that. It ran into from 22 pips risk to 300 something pips profit. So if you look at my chart now, you can see how simple it is. I did my best to make sure that it's as simplified as much as I can. So for now, today being Friday, I'm not placing any trade on gold. I do say something, keep it as simplified as much as you can. I don't know what people gain from actually making trading look bogus. From one time or the other as a trader, you might see yourself pick 1 or 2 losses in the market, but let it don't get to your heart. As far as you know what you are doing, you still pull the trigger. I've seen losses in the market, I've seen profit. But in the long run, I have not lost hope in my strategy. I just have to control my risk. And no matter what happens, I still bounce back and I keep going. So give it what it takes. You can do it. Thank you.